I'm Gloria Metri of IBS Intelligence, and you are listening to the IBSI Views podcast. Nominate your company now for the IBSI Global FinTech Innovation Awards. Spotlight your achievements and position yourself among global industry leaders and disruptors in FinTech. Go to the awards entry page on our website, ibsintelligence.com, to explore awards categories. Today, I am joined by Nitin Rao, the CEO of InCred Wealth. As a private banking expert, you have seen multiple cycles in the wealth management industry in India. What do you think helps firms succeed in this highly competitive space?
The markets constantly keep evolving, and in the recent past, you've seen heavy financialization of the Indian markets, which makes most of the products commoditized. So, what really then matters is what is the difference we can create with more and more new products that we can get into the financial market space. And hence, I would say that differentiation is what really drives the evolution of financial markets here.
Makes sense. What do you think are the parameters for a wealth management firm to succeed, or have they changed?
See, earlier India was quite underpenetrated in terms of wealth management. So earlier, the parameters for a wealth management firm to succeed was just that you introduce more and more financial products like mutual funds, like equities into the customer's basket. And one would get happy if the customer started investing in products. Today, I would say that it's not just investing and showing products, it's about what you call alpha generation. So, the question is whether a wealth manager, through his methods or his products, can generate additional alpha or additional return from the products that he is offering and which customers would typically invest into the markets on their own. So, if, for example, you're investing in debt products, an FD will give you 7-8% kind of return. Can we give 13-14% return on a consistent basis? Then that is alpha. Today, if an investor is investing into equity, he's making 13-14% return on his own. So can we give 20% plus, 25% plus returns on his investment? That's alpha. So if we can create alpha, it is a measure of the fact that we are making a difference to the customer's life.
On the same line, what are some significant technological advancements that are shaping the wealth management industry today?
See, wealth management industry by and large is very fragmented, and hence different products, different businesses have the back end which is totally unfragmented. So the first technology innovation that's happening is getting systems and platforms in place which can integrate all this into one place, which by and large the industry is able to do quite well. Beyond that, you look into methods of investing which are automated, which is gradually happening. Today it's happening very easily for mutual funds. For AIS, PMSs, it's happening slowly. For bonds, etc., it is happening smoothly. So different products have different levels of automation. And finally, what we are trying to do at InCred is trying to create a platform which gets all this together, where customer can log in himself, can register himself, can see his products at one place, can do the research himself and get an aggregated portfolio design. So to that extent, platforms is where the evolution is really happening. And how well a customer can see his portfolio is where the evolution is happening.
And what about high net worth individuals? Do you think that they are at par with their global peers, or are there areas that we're still catching up in?
No, honestly, the international markets are very advanced vis-a-vis domestic markets. And to that extent, we are behind international markets in the products we offer. We are, however, lucky that India is growing through a growth phase, which is kind of a unique one, which is unheard of across global markets. And hence, the requirement of global products is not too much. And Indian investors are making superior returns just by investing into Indian products. There are a few products like PE funds or like structured products with Protect Capital, quant based funds, etc., where the knowledge is getting transferred and the products have gradually started getting manufactured in India, which is, I think, the good part of the evolution that we are seeing in Indian markets and which will take us forward. Over time, as the Indian markets reach its peak in terms of economic saturation, then I think we need to see into international products, but that's not the need right now.
Okay. And do you think these are the trends that you've observed in high net worth individuals investing in India?
Yeah, these trends are very, very important right now. So, for example, earlier a lot of investors would invest in public stocks or equity mutual funds or PMSs. Today, we see a lot of them investing into new age technology, kind of unlisted ideas or early stage ideas or early stage P funds or quant funds which do hedging, etc. Similarly, on the debt side, Indian investors would not take too much risk, but now we are seeing more and more people investing in products which are triple B or fintech based or venture based, etc. To that extent, these are international trends which are being used in India. Global diversification is what we would want at some stage, but still early days for India.
And how does InCred Wealth cater to this audience?
InCred Wealth is a new age finance business operating both across the fintech space and the RM space directly. All the concepts that I spoke to you, which are alpha generating, is what we are introducing into Indian markets. As our economy evolves, as the startup ecosystem evolves, our products are evolving in that framework, which very few kind of do that. And hence, our customers are getting exposure into new and new ideas, new and new methods of investing, which I think is the next generation of investing strategies that Indians will see over the next 4 5 years.
Talking about the next generation of investors, do you think that they have different expectations from wealth managers today? Do you think they want something more out of what we used to leverage before?
Yeah. I think originally the investing was more traditional. The new age investors obviously want to take more risk. They want to make returns at a faster pace, and they want exposure to newer and newer ideas, which could include new technologies, new funds, option based investing, businesses which protect capital like structures, which definitely gives a faster and better return expectations, but at higher risk, which is what the new generation is. This does not mean that typical traditional investing goes out of the window. It's just that certain portion of the wealth is allocated for these new age styles and certain is allocated for the traditional styles.
So we hear that the next decade is very critical for investors to participate in. Even the younger generation, we see that investment has started much earlier than we used to see. Usually, it used to be the working class people, usually people in the mid 20s, late 20s, who would be interested in investment. But now we see children as early as teenagers taking interest in investment. So, what would be your guidance to investors in terms of how best to manage their portfolio?
No, just to kind of, I started 30 years back, but even that time, my interest in investment started in college. So it's not that the current generation is different, but clearly because of platforms, because of the social media revolution, today the knowledge of investing is spread wide, and hence a larger section of the population is definitely coming into investment at much earlier levels. I think it's a good thing to do because it is good that people start taking the risk based investments early in their kind of careers. My only advice is it's important to understand what investments are, it's important to understand what fundamentals are. It is a very good area to invest in. I don't like the speculative part of the investment framework, which is option trading and all that. I think it is possible to take reasonable risk, take early exposure to equities, build long term goals, and participate. But my only thing is knowledge is more important. And I think while today the tools are there, while the methods are there, I think building knowledge and understanding it is important. Getting associated with professionals or platforms which give this knowledge, evaluate it, etc., are important. So I think it's a mix of all this which matters and not just blind investing into the next trend that comes in CNBC or the media on a regular basis.
Okay. And what is InCred Wealth doing to better guide these investors, young age investors?
No, so many, we essentially customize all our thoughts into products. One thing of investment is a portfolio which people evaluate and manage on a continuous basis. Second thing is to have ideas around individual products. So, on the equities side, there could be unlisted stocks at early stage, they could be PE funds, or they could be small cap, mid cap ideas, PMSs, AIFs, all of which meet the same objective that a new age investor needs. Same way on the debt side, it could be credit alternative funds, it could be quant funds. So we design products which meet the need. so that the client does not have to bother about the day to day worry of the risk on the investment. They are confident there are fund managers behind that. And they then write the risk with regular reviews, etc., to ensure that the investments are not going off track. So, what we try to actually give them is the products which help them build a good portfolio.
How do you keep yourself relevant in a competitive market such as this?
On the technological front, we have a strong technology team which has been associated in building platforms right from early days. And one of our core businesses that we are trying to do is getting automation to the investor in every possible way. So, technology is through teams and ensuring that we invest regularly in those areas. On the business side, the way our company is structured is it's a mix of international wealth experts and domestic wealth experts. We have offices abroad and in India. We have fund management capabilities in various products. So, at least on the knowledge side, we are at the cutting edge of what is happening globally. And we quickly translate it into what is available domestically, which is the differentiator that we get into clients.
And how are the markets different? How's the attitude of an investor different from a domestic client compared to an international one?
No, I think internationally clients take more risk. It's a much more advanced market, so liquidity is also more. You can take loans against the investments, they call it leverage, and it's possible to diversify in different markets. When you're in India, at this point of time, you're focused mainly on the domestic market, and then you see various opportunities within that domestic market. One would have been worried if India was not doing well, but since the country is doing well, broadly we take lower risk than international markets. Investors in international markets, the risk taking ability has started going up. And to that extent, I think that is good for wealth creation, is good for growing economy. It is often said that India's rate of growth of wealth amongst investors is going to be very, very high from here on. And I think what people like us are doing, and so also other wealth entities, are ensuring that we don't miss out on the wealth creation opportunity that's happening in India, which was earlier concentrated to a few, and now we have expanded it to much broader segments in the population.
That was Nitin Rao, CEO of InCred Wealth.